Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock. With news, there are some significant jitters being felt in a widening range of banks globally as debt maturities for commercial properties spook everyone. But first, in the US, the number of people claiming for jobless benefits rose for a second consecutive week to their highest level in 11 weeks. Also, there was a sizable rise in the number of job cuts reported in January. They typically spike in January, so it's hard to assess whether this is out of the ordinary. But this year, the spike was more than usual. In fact, the highest since January in 2009. Job cuts in financial and tech sectors were prominent in these data. But the factory sector might be turning a corner, up. The widely watched ISM factory PMI improved in January to its best level since October in a sharp and unexpected change. The sector is still contracting, although at a much softer pace, as demand moderately improved and output remained stable. The improved bit was that new order levels expanded sharply. Internationally, there were a wide range of factory PMIs released by S&P Market for January, and they also showed an overall improving trend. In fact, this sector is no longer contracting globally, the best it has been since mid-2022. In India, their central bank has ordered Paytm to immediately cease trading. The ubiquitous payment app there and its related bank have ignored regulator warnings about the risks it has been taking. Paytm is backed by both Japan's SoftBank and China's Ant Group. The improved PMIs are supported by global air passenger travel data for December, which is up strongly from a year ago. However, compared to pre-pandemic levels, it's not quite there yet. Domestic air travel is higher, but international travel is not. In large part, that is because Chinese travellers are still staying home. But the global commercial property market looks like it is starting in a serious downward spiral. Lower valuations are squeezing leveraged owners, many of whom have large maturities imminent, and that is rocking banks. Although it has been long foreshadowed, we may be entering a very rough patch for banks exposed to the sector. About $1 trillion is immediately involved. US Treasury 10-year yield starts today at 3.87% and down 9 basis points from this time yesterday as bond markets price in more anticipated Fed rate cuts. And the price of gold will start today up another $13 from yesterday at just on $2,063 an ounce. But oil prices have a little change at just on $76.50 a barrel in the US, while the international Brent price is $81.50 a barrel. And the Kiwi dollar starts today at just on 61.3 US cents and 10 basis points softer than yesterday. Against the Aussie, we're up 30 basis points at 93.4 Australian cents. Against the euro, we're a touch softer at 56.5 euro cents. That all means our trade weight index starts today at 70.3 and unchanged from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again on Monday.